Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Alright, good evening to all the friends in the group and viewers online. Good evening, everyone. Today is Thursday, November 6th. Let's take a look at the two topics and see what new information we have to share with everyone. First off, is the US stock market like a traffic light? The second topic is the watershed moment for AI mirror boxes. Why do we say the US stock market is like a traffic light? Well, it goes up and down, which might make some investors feel that this market trend, or this kind of fluctuation, is hard to get a handle on. So a bit later, we can share some information with everyone, take a look together, and also help interpret it for you. Maybe there are some strategies or mindsets for operating in this market that we can discuss and exchange ideas about. As for the second watershed moment in AI competition and cooperation, there are some major new updates. We'll also guide everyone to observe some new facts or look at different kinds of data. Alright, thank you to our online viewers. Alice Fu, hello and good evening. Inin Mai Daisy, hello and good evening as well. Now, let's get into today's main topic. First of all, why do we say that the US stock market traffic light was green on Wednesday, meaning it went up? Today is Thursday, and investors are actually paying attention to the latest unofficial data that was just released. This is the ADP employment data we talked about during yesterday's live stream, which comes from a private organization. The number came out to be 42,000, which is higher than market expectations. Also, yesterday at the Supreme Court, there was a hearing related to Trump's proposal for comprehensive reciprocal tariffs. In fact, many of the judges, they questioned the government's attorney one by one, each taking their turn, raising a variety of concerns about, for example, how exactly they defined what constitutes an emergency situation, and whether imposing such broad, sweeping, across-the-board tariffs on countries all around the world was truly legally justified or actually made sense from a policy perspective. Break time equals 0.5s/so, as these updates and developments kept coming out, one after another, in quick succession. This also gave the US stock market a bit of a boost in optimism and risk appetite. In other words, investors and institutions in the US stock market started to wonder, hey, does this mean that the judges actually have a lot of doubts and concerns about Trump's plan for comprehensive reciprocal tariffs? I should also remind everyone here that the timing of this ruling is still uncertain. It could take quite a while. It could take weeks or even more than a month, since they may still need to conduct hearings, review documents, and so on. In short, regardless of the outcome. Given Trump's consistent belief in tariffs, even if this time there's a chance that some parts might be overturned or a ruling is made that's unfavorable to the Trump administration. Afterwards, he still has options like Section 232 or Section 301 tariffs that he can apply. It's just that they might not be as broad and comprehensive as the reciprocal tariffs imposed this April. Of course, recently, the tense situation between the two major trading powers, the US and China, has eased. That is to say, both sides have reached some new agreements and taken new actions. I briefly explained this to everyone earlier this week, from Monday to Wednesday. So now, both parties have about a year to carry out follow-up actions. Each of them has taken new and significant actions for the industry, whether it's by introducing a remedy plan or because they're still actively competing behind the scenes. Break time equals 0.5s/. But one important thing to note here is that even though they've managed to reach this kind of temporary agreement, going forward, whether it's China toward the US or the US toward China, there will definitely be enough caution. Ultimately, the question is whether the other side has actually done what they promised, or if there will be unexpected complications. Like, even though something was agreed upon, could new variables arise? All of this remains to be seen and could become a new wave of uncertainty. However, it won't erupt so quickly, since the agreement has just been reached. Alright, let's take a look at the next part. The main Supreme Court justices have raised questions about the legality of Trump's tariffs on multiple countries. So, some stocks like department stores and consumer-related companies have started to look more optimistic because of this. If there's really a chance for these tariffs to be lifted. If the tariffs are revoked and the ruling is more favorable to the general consumer, then these consumer-related stocks could benefit. In the future, their costs might not be as high, or it might not negatively affect consumer willingness to spend. Let's take a look. As for Trump, at the Republican senators' breakfast meeting yesterday, he already said that the government should reopen as soon as possible. For him, the stock market hitting new highs is a big deal. The bull run has lasted for about 6 months since April. He thinks that this kind of bull market, just like he mentioned yesterday, is actually because of the tariffs on China, or maybe because people are satisfied with his policies. That's why Wall Street keeps going up, and the stock market continues to rise. So what about the Republicans? He hopes to tell them not to rely on the Democrats, to see if there's a way to get the vote done without their support. But unfortunately, it looks like that's not possible right now. Why? Because here it mentions that in March there's a rule for lengthy debates, which means most legislation needs 60 votes to pass. Like yesterday, there was another new vote, right? It was 54 to 44, so with a gap of 6 votes, they still couldn't restart the government. It also mentioned this lengthy debate rule. Actually, generally speaking, whether it's Democratic or Republican lawmakers, either side is willing to easily give up this rule. Why is that? Because if they give it up, when one side is in the majority and the other is in the minority. For example, like now, the Democrats have slightly fewer votes. They're a bit short, but they can still use this kind of action to have an impact. So with this, if things get reversed later, for example in next year's midterm elections, if the Republicans lose some seats and become the minority, their willingness can still have the same influence. But if, as the news says, Trump is calling on Republicans to get rid of or abolish this kind of rule, then actually, no matter which party the members of Congress belong to, their influence and voice in American politics as a whole would be diminished, would be reduced. So, in fact, this doesn't align with their core interests. So we also need to think about this. These members of Congress, the American people, and even Trump's own interests are not completely aligned. It's like, do you really think Trump actually cares that much about reopening the US government? If he really cared that much, would he only be bringing it up now? Because he only started talking about it after seeing the stock market take a dip and correct itself. Maybe, back on the 5th or 10th day, he should have already been pushing hard for this and calling for it. Is it because he realized, hey, things are starting to get more and more serious? That's when he became aware of how serious this was, or that's when he started calling for a restart. Okay, let's take another look. Yesterday, why did we show this company FEDA here? Because yesterday, for example, around 4 or 5 in the morning, right before the market closed, its situation was rather unique. The indexes were still going up, but FEDA started to weaken. So, as a result, the index later on, for example the S&P, began to narrow its gains. Its decline, well, yesterday FEDA's drop was 1.75%. It was originally rising, but then turned into a loss. The day before, we showed everyone the PE ratios of the so-called trillion-dollar club. And as I reminded everyone yesterday, I'll remind you again today, when it comes to these market caps, the price-to-revenue ratio, as well as the PE ratio, will change every day as the stock price fluctuates. For example, if you remember from yesterday, the PE ratio was 58. We'll just remember the whole number part. But today, because the price dropped, it shrank a bit and became 57. Alright, so if we look at the P/E ratio here, yesterday it was 36. Yeah, 36. And then here, yesterday it was 31, now it's 37, so there's a slight change. Yesterday, I saw Broadcom was at 85, and today, because of the price increase, it went up. As for Meta and Berkshire, both were at 21 yesterday. And yesterday, Tesla was at 319, and since Tesla's price went up, its PE ratio also increased. Okay, so today we're providing an extra column of numbers for everyone as a reference, which is the price-to-revenue ratio. What does that mean? It's the stock price per share divided by the revenue per share. In other words, how much of the stock price does it take to get 1 unit of revenue? That's basically the idea here. In other words, how much stock price is needed to support or exchange for $1 of revenue. Okay, so looking at it this way, actually, we can see that some are relatively low. Let's start with the lower ones. For example, with Berkshire, it takes about $2 of stock price to get $1 of revenue. That's because, for Berkshire, whether it's the core holdings or the businesses within, many of them are quite mature. They're relatively mature, and maybe their growth isn't as high as tech stocks. For example, in the financial sector, there's American Express, Bank of America, or companies like Coca-Cola, and then there are reinsurance companies and railroad companies. These are some of its major core holdings. Although it also holds Apple, because The proportion of that in its portfolio isn't actually that high, so you could say it's a pretty well-rounded holding company. Now, if we look at Tesla, for example, you can see its price-to-earnings ratio is extremely high, right? Over 300, yeah? Everyone thinks so too, but its current stock price is still staying at a high level. So why does the market give it such high recognition? It's related to things like humanoid robots, or the new technologies it plans to develop in the future. Whether it's related to AI or various aerospace and space technologies, all of these are good. In short, the market's recognition of it is also high. So having a high P/E ratio isn't necessarily a bad thing, and because of this, its stock price has indeed gone up. Now, as for its price-to-sales ratio, that means for every $15 of stock price, there's a corresponding ratio. $1 in revenue, right? Now, what about others? There are some comparisons worth noting. For example, Amazon, in the US stock market, has a price-to-sales ratio of 3.84, meaning $3.84 in stock price for every $1 of revenue. Now, looking at some that are a bit higher, let's compare these two in terms of P ratio. For example, Nvidia and Broadcom and Nvidia seem to be at 57 and 87. That does look a bit on the high side. But if you look at it from the perspective of the price-to-sales ratio, it's actually not that out of control. Relatively speaking, it's a bit more reasonable. For example, a stock price of $20 or $28 for every $1 of revenue, given their growth potential, that's actually quite justifiable. Whether it's data centers or servers, for them, they're all about pursuing rapid growth. Especially when you look at Nvidia's various sectors, or for example, Jensen Huang's remarks at GTC, or his goal of reaching something like $500 billion in revenue in the future. These are all up. This is exciting news for the entire industry. Okay, so yesterday this was also mentioned. The company's market value was about $4.83 trillion, but since the stock price dipped a bit, it went down as well. So if it keeps correcting, it might drop to $4.6 or $4.5 trillion, or maybe it could climb back up and rejoin the $5 trillion club. All of these are possible. Now let's take a look at Europe. The slowdown in growth brought about by the pharmaceutical hub has affected Legrand. Legrand is a French industrial company, and what they actually do is ventilation and air exchange, or things related to cooling, usually in the more back-end areas of data centers. So, when it comes to their participation in the data center boom and the construction of related infrastructure, this is also relevant. It's worth keeping an eye on, even though most people tend to focus on US stocks. Here, we're also bringing in some information about European stocks. For Legrand, its organic sales growth in the third quarter was 6.7%, which is slightly below the expected 9.1%. So, it's a bit below market expectations, but the growth is still pretty good. Now, as for whether this momentum is really slowing down, we still need to keep watching going forward. Because actually, during the growth process, sometimes there will be a bit of ups and downs, or it might level off a little, which could be reasonable. After all, it hasn't turned into negative growth, so it's not that serious. Alright, let's take a look at the Nvidia index. Oh, sorry, my mistake. I mean the S&P index. As for the S&P index, it went up by 0.37% yesterday. You might feel like, hey, how come it seems to be moving in the opposite direction from Nvidia? Is there a bit of a gap there? So that's something everyone can pay attention to. So this means that yesterday, the US stock market overall, in terms of market breadth. As for the rise in other stocks, like we mentioned on the very first page, there were about 300 stocks that closed higher. So even though the largest weighted stock, Nvidia, had a slight dip, the index was still able to maintain a pretty good performance. So overall, it does look like there are some relatively positive signals. What was the even more positive news yesterday? It was the soaring Philadelphia Semiconductor Index, the SOX, which rose 3.02%. Why do we call it the US stock market traffic light? Here, it refers to the current situation. People might think, isn't it just going up one day and down the next, up one day and down the next? The trend doesn't seem all that clear. So how can we think about this? Whether we're riding in a car, taking public transport, or driving ourselves, when we look ahead, what do we see? When the traffic light is green and about to turn red, what comes in between? The yellow light, right? You can basically think of it as a red light. Why? Because when it's yellow, it really tests your personal choices. Some people are more aggressive, like say, it's 3:30 in the morning on Zhongyao East Road, which everyone knows is a main road. So if you see a yellow light, some scooters might just speed right through it, just goes straight ahead. But if it's, say, broad daylight during rush hour, when everyone's in a hurry, like around 8 or 9 o'clock, drivers might be a bit more cautious when they see a yellow light. This all depends on each person's risk preference and whether they're cautious or not, because, well, being cautious might be a good thing, but it could also be a drawback. When facing risks, is it possible that sometimes you might miss out on some profits? Or could you possibly miss some opportunities? But if you're too much of a risk taker, could you end up falling into a trap? All of these are possible. Like we say, there are actually two types of guts or risk taking. What's the first type? It's when everyone is losing, right? What's the second type? Not being able to keep up with the gains. That's when the formal fear of missing out kicks in. Alright, let's take another look. So, about the so-called semiconductor index. Today, let's look at what drives the ups and downs of the semiconductor index. If you look at the left side, wow, the magnitude of the increase is pretty astonishing. For example, if we look at Micron and Nuvoton, their gains reached 8.93%. Yesterday, that was a major factor driving the semiconductor index up, a really important key point. And Marvel? That 6% gain is also pretty good. As for ON, it went up by 4.65%, which is also not bad. Now, did the right side lead the decline yesterday? Actually, not really, because the main drop was mostly just from one company. Nvidia did drop, but it wasn't that bad. It's not like it fell by 4 or 5% or anything, just down by 1.75%. As for the others, their gains were actually pretty decent. Most of them were up by 1 to 2%, which is still good. Now, let's move on to today's second topic. The dividing line in AI competition and cooperation. Actually, this is some pretty early news from today. Nvidia CEO, Jensen Huang, when speaking to the Financial Times, said that China will surpass the US in the AI race, partly because of lower energy costs and more relaxed regulations. Now, first, let me give everyone a quick update here, because actually, Nvidia or their related company teams, earlier on, took some of Jensen Huang's previous statements and rephrased or clarified them. The main point is that, actually, in his earlier remarks, Jensen Huang said, "Right now, China is catching up to the US in AI development, with only a very small gap between them. So, as of now, the US is still in the lead, right?" That's why Jensen Huang made such a statement. Of course, what he's really doing is downplaying concerns about whether the US is about to fall behind China in the AI race. He's trying to ease those doubts. But the point he raises about energy costs is indeed something worth considering. Because, in fact, respected business leaders like him tend to have a far-reaching vision. They're more forward-looking, and might even be considered prophets in the industry. So, with him leading such a huge and remarkable company, let's take a look here at what happened on October 24th. This is actually old news. Well, within 60 days, anyway. Previously, the Trump administration had strongly pushed for speeding up the approval process for data centers to connect to the power grid. So, in fact, he had already been cooperating with this kind of initiative during the Trump administration. Given the demands of the AI industry, he hopes to urge the Federal Energy Regulatory Commission to implement an accelerated review process. The goal is to align this speed with the needs of the industry, so that everything can be connected seamlessly. Alright, so as mentioned here, the waiting time for review and approval is limited to within 60 days. Originally, this process could have dragged on for several years. Now, moving on, he also talks about some high-energy consuming data centers. As for the hyperscale cloud service providers, which are probably more related to the big tech giants, they would benefit from this kind of action, whether it's legislation or policy. However, some of the people living nearby, the general public, will worry that these companies, since they need a lot of electricity, right? So it could cause some fluctuations in electricity prices. That is, if the local electricity usage increases, say, in a situation where demand is high, will electricity prices go up? Alright, next let's take a look at the S&P 500 Utilities Index. Actually, there wasn't much change yesterday, and that's because the data we're looking at covers from January up to now. In other words, data from the beginning of this year. You can see that it has indeed gone up. Now, let's look at the top right corner. The year-to-date increase for the S&P 500 Utilities Index is 19.3%. If we compare that to the S&P 500 itself, the S&P 500 has risen about 15.8%. So it's still slightly outperforming the S&P 500. In other words, the demand for electricity driven by data centers has already boosted the development of related electricity sector indices. Of course, within that index, there are certain components or individual stocks that are worth paying attention to. We can see that, first of all, the ones with the biggest gains since the beginning of the year are NRG and CG, which is Constellation Energy. There's also American Electric Power, AP, among them. For example, their gains range from 29.85% to as high as 91.96%. As for the ones with more obvious declines, from the beginning of the year until now, the ones that have dropped are PCG and EXC, which have fallen by 19.38% and 28.888% respectively. Now, if we take a look, NRG's main surge since the start of the year happened in May. Actually, looking at it recently, it's still hovering at a high level, consolidating and fluctuating around the top. Yesterday's increase was 3.1%. Let's take a look here. Actually, before the market opened today, NRG announced its latest quarterly revenue, which was $7.64 billion, higher than the expected $7.57 billion. However, their full-year profit forecast is slightly below Bloomberg's consensus or estimates. It's between $3.88 and $4.03 billion, which is lower than before. Analysts were expecting $4.04 billion, but in pre-market trading, the stock saw a slight uptick. Alright, let's take a look at something else. Also, if we look at the relatively underperforming EX so far this year, which is related to Edison International, this kind of situation. I've also shown everyone the stocks line chart for your reference and attention. Okay, moving on to the second part, we're talking about the inflection point and watershed moment for AI. Why did I just mention that both China and the US are racing against time? Because, actually, the US hopes to establish a supply chain that doesn't involve China, especially when it comes to rare earths. Whether it's the initial mining, the intermediate separation and smelting, or even the later stage processing, the US wants to remove China from the equation. This is actually the same idea China has regarding semiconductors. When it comes to chips, China also wants to reduce its reliance on the US. How should I put it? Let's take a look. According to Lu Tao's report, China has banned anything related to this. These newly built data centers that receive state subsidies are prohibited from using foreign AI chips, no matter which country they're from. In other words, they want to use domestic Chinese products. It also mentions here that Beijing has long hoped to reduce its dependence on American chip technology, which is actually pretty well known. So, in fact, they're gradually reducing things like, for example, the import or use of NVIDIA chips. Here, it also mentions that regulatory agencies may issue guidance in the coming weeks, hoping that the large data centers currently under construction will follow these directions. For data centers that are still less than one-third complete, they should hurry up and make the switch. And if they've already bought and used these foreign chips, they should remove and replace them, take them out, and swap them for chips made by local Chinese companies. There are some well-known Chinese chip design companies, like Huawei or Cambricon. Of course, Huawei itself isn't publicly listed, but maybe this will be the direction China takes next. For example, in the semiconductor sector, they hope to do their own R&D, design, and manufacturing. As for whether this trend will succeed or whether it will benefit their AI application industry, that's still something we need to keep an eye on. In short, if the construction is progressing quickly, if it's almost finished, then each case might need to be handled individually. The approach might still be the same, gradually phasing out and replacing, or slowly swapping things out and replacing them over time. Alright, so in other words, China is showing determination and consistency in wanting to carry this out. Now, let's take a look. Actually, in the US stock market, there are also Chinese concept stocks that are related to China. Or you could say, similarly, there are Hong Kong stocks in Hong Kong's market. One of the biggest and most well-known among them is Alibaba. The reason this news caught attention is mainly because, in a mathematics competition, Alibaba was up against OpenAI, the parent company of GPT. They competed against each other, and you could say they were neck and neck. In fact, when it comes to the development of large language models, in many aspects, Alibaba's performance is on par with, or even ahead of, companies like Proud, DeepSea, xAI's work, and even some of OpenAI's newer models. Sometimes they're evenly matched, and sometimes Alibaba even takes the lead. So, in other words, people generally feel that it's a large language model that can come pretty close to the mainstream global or Western models. Of course, when it comes to commercial applications, there's still quite a gap. Why is that? Because some of Alibaba's newer models, especially those aimed at consumers, like the Quark model, for example. If we look at GPT or OpenAI, their commercialization has probably already reached $1 billion in revenue, whereas Quark might only be making a few $100,000. The gap is still huge, so that's something to keep in mind. Alright, here we've also listed the latest information on Alibaba's US stock earnings for everyone to see. As we can see, it's now approaching the end of 2025. The orange bars represent the data that has already been released and reported. But everything from 2026 onward is shown in gray, which means it hasn't been released yet, or it's just an estimate. So you can see that in 2026, its earnings will be under a bit more pressure. As for why that is, let's look into the reasons, because in 2026, when it comes to capital expenditures, it's actually quite high. If we look at, say, the top 3 in China, like Alibaba, Tencent, and Baidu, then Alibaba and Tencent are the top 2 companies with the largest capital expenditures. Especially in 2026, it will be the number 1, meaning it will have the highest expenditures, so this could put some pressure on its profits. Okay, so its stock price might also start to gradually reflect this situation. Alright, as for its performance yesterday, it rose by 0.32%. So moving forward, we still need to watch and see whether, before the end of this year, it can find some new breakthroughs, or if there will be any new progress in terms of monetizing its data. Alright. This chart here actually comes from Bloomberg, where they discuss the development of AI between China and the US. But what it mainly highlights is the large language models, or LLMs, that China has already started planning or is already using. The number of these has been continuously increasing. We can see that both the orange bar chart and the blue line graph are steadily rising. From September 2023 to June or July of this year, they've both been developing in this way. So, what this means is that there are actually many large language models being continuously developed and applied in China. They're gradually catching up with the global mainstream and trends. Ever since GPT came out, this has become a popular way to use these models. We can use it for Q&A, or even have it help us summarize some documents, various similar AI applications. Now, let's take a look at something else. This is information in the US stock market that's even more worth paying attention to. Apple and Google, that is, Apple and Google, have entered into a collaboration, or at least, there is a possibility of such a partnership. Sources have revealed that Apple plans to use an AI model developed by Google over the long term, which has 1.2 trillion parameters. Actually, that's a pretty large and comprehensive model, and it can help Apple. The hope is that Apple will use it to upgrade Siri, its voice assistant. Alright, so how much money are we talking about here? Each year, Apple might have to pay Google around $1 billion to use this technology. Now, it was mentioned that Apple actually considered doing some screening or selection in this regard. For example, they tested Google's Gemini, OpenAI's GPT, and Anthropic's Claude. Earlier this year, they might have worked with Google, but why is this news only coming out now, or has a final decision even been made yet? Actually, I think it's better to wait for the official announcement. Apple, for example, wants to use this technology as a transitional solution. In other words, Apple often tries to minimize its reliance on key technologies, so they're looking for alternatives. Whether that's a second source supplier or developing it themselves. For example, with their previous chips, they also developed their own relatively C2 chips. Alright, so now Apple actually wants to develop its own models too, but maybe it's still lagging behind in some areas or things are still a bit unclear. So before its own models are released, it can first team up with Google and leverage their strengths together. Okay, so according to Bloomberg's report, it's expected to be released around next spring, right? So there are still a few months to go. We can wait for the official announcement, and then make a more definitive judgment or follow-up observation. As for Google, its stock had a pretty good gain yesterday. Yeah, it went up by 2.44%. Now, let's take a look at Apple. Apple's performance was pretty much flat, with an increase of just 0.04%. So relatively speaking, as we mentioned yesterday, Apple has been If Apple wants to target the relatively affordable laptop market, then it could potentially take some market share from Windows or Chromebooks in that segment. In other words, will the growth momentum for its next generation of revenue come from here? That's something we'll have to keep watching. Alright, let's take a look at some international and investment news. So, among them, the new Fed official, Lise Hammerfan, said in an interview with Yahoo Finance on Wednesday that, overall, he sees moderate potential for job growth. This is in comparison to what was mentioned earlier. Is employment really falling into a recession? Or is it just cooling down, as Chairman Powell mentioned, possibly in a more gradual way? It's trending downward, but for him, the demand for labor is below the ideal level. Compared to his previous consistent stance, he now seems to be weighing both sides. On one hand, long-term inflation stability, and on the other, maximizing employment. Right now, he places a lot of emphasis on maximizing employment. He hopes that if there are certain situations in the job market, he can lower interest rates a bit more. This is consistent with his previous stance, which is relatively dovish. Alright, let's move on and take a look. Now, regarding the services index, yesterday, this was actually a relatively positive piece of news. The services index rose by 2.4 points to 52.4. In fact, an index above 50 is generally considered good. And actually, when it comes to the service sector, it makes up at least 70 to 80% of the US economy, so it's a major component of the overall economic structure. In the next days, unemployment benefits and non-farm employment data won't be released since the government is shut down. Tomorrow, we can monitor the University of Michigan's Consumer Sentiment Index and their outlook on short dash, medium dash, and long-term inflation. Next, let's take a look at some of the company earnings reports for this week. For example, McDonald's saw its same-store sales in the U.S. grow by 2.4% in the third quarter, which actually beat market expectations. The main reason they attribute this performance to is that every time these customers come in, on average, according to long-term statistics, the amount they spend per visit is higher, and their spending habits or the way they spend is better, which has driven up same-store sales. Alright, next up are Apple, Qualcomm, and ARM. We've also done a bit of follow-up research here. For the latest fiscal quarter, the earnings per share were $0.39, which is higher than the market expectation of 33 cents. Total revenue was $1,014 million, also above the market expectation of $1,006 million. Forecasted revenue is between $1,018 million and $1,028 million, which usually falls in this range for the upcoming quarter. Revenue exceeded the market expectation of $1.11 billion, so overall, the information is optimistic. For App, this is the latest fiscal quarter situation. EPS was $2.45, higher than the expected $2.40. As for revenue, it was $1.41 billion, also better than the expected $1.34 billion. For the latest quarter, the company expects total revenue to be between $1.57 and $1.6 billion, which is also higher than the market's estimate of $1.54 billion. Alright, let's take a look at the pre-market gainers and losers in the US stock market today. In pre-market trading, the most notable movers are Snap and, Marvel. Snapchat and Marvel, the chip manufacturer. As for the top decliners, there are 4, Dash, Hubs, FT&T, and DD. Others, relatively speaking, like Qualcomm, for example, are down 2.35% in pre-market trading. And then, for instance, the rest are actually relatively stable. As for the pre-market gainers, there are stocks like CRDO, APD, and so on. Other related stocks, like SNCI, are also seeing slight gains. WDC in the hardware sector is also up a bit. Social media-related stocks might also be influenced by Snapchat's movement, showing some gains as well. Alright, let's take a look at why Snapchat had such momentum for a pre-market rally during this session. Actually, it announced a partnership with Perplexity, an AI-powered Q&A platform, whether you call it a chatbot or a search engine. They signed a $400 million collaboration agreement, which means that in the future, Snapchat will integrate Perplexity's AI into its Snapchat app. So what will this bring? It represents a new business direction for them. Starting next year, they'll integrate this into their chat interface, making good use of these AI resources. It's also a new kind of partnership. Now, as for Marvel, it's because SoftBank Group has been exploring it. There is a possibility that they might acquire Marvel. However, this news actually came out earlier this year, but it's only now being revealed, which has created a new positive development for Marvel. But, as mentioned here, over the years, he has been intermittently evaluating the potential acquisition of Seaway, but in the end, whether it was because the negotiations didn't work out or because Mr. Masayoshi Son is still observing the company, nothing has been finalized. So at the moment, there is no definite conclusion. It's just that the news itself has already triggered a sharp rise in the stock price. Alright, let's take a look at FTNT. It's a company related to network information security. In pre-market trading, its stock price dropped at one point. When I checked just now, it was down about 8 or 9%, and at one point the drop was even heavier. The main negative factor comes from its main negative news comes from the fact that revenue in its primary service segment was below market expectations. Otherwise, its other numbers weren't actually that bad. The main concern is this, and people are worried about its future growth potential. Alright, finally, let's take a look at DuPont. The company announced its net sales for the third quarter, which came in below analysts' average expectations. The forecast was $3.19 billion, but its actual net sales were only $3.07 billion. Alright, but in response, the company started taking some actions related to shareholder interests. For example, it increased, well, not necessarily increased, but for instance, it authorized a $2 billion share repurchase and also launched a $500 million accelerated stock buyback program. These are relatively favorable for shareholders and help boost shareholder confidence. Alright, so today we talked about the red and green lights in the US stock market, as well as the hardcore aspects of the AI industry, whether it's between the US and China or between Apple and Google. We need to understand that if, for example, the current situation really is a yellow light, then everyone can make decisions based on their own risk preferences, or, say, their available funds, or perhaps a more optimistic outlook on certain individual stocks. However, it's important to pay attention to the crucial homework, whether it's digging deeper into financial data, following industry trends, or even personally seeking out relevant information. You could also do more research from different perspectives or conduct investigations, starting with areas you know. For example, people in Hsinchu Science Park usually understand the development of the semiconductor or tech industries better. If you work in finance, you might be more familiar with banks, insurance companies, or fund companies, so you can read more information about those. If your background is in pharmaceuticals, it could be hospitals, pharmaceutical companies, or medicine. If you work at a pharmacy, you can focus on companies or industries related to pharmaceuticals and talk to people in those fields to learn more. This might help you improve your chances of success or your confidence in investing. So that's all for tonight's Equity Good Night segment. Thank you all very much for watching. I hope everything goes smoothly for you. Thanks again for tuning in, and we'll see you again tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.